Well, a quarter-point cut was the vote of 11 of the 12 voters. The lone dissenter was brand-new Fed Governor Steve Myron. He wanted a half point. That's not as much as our next guest. Joining me now is David Zervos. He's chief market strategist at Jefferies and a CNBC contributor. He's been saying they should have cut 75 basis points at today's meeting. Hasn't met with the Trump administration about the Fed chair nomination. David, good to see you. So I'm trying to figure out how far off from the range are you here? 75 looks like a big number, but how many more cuts do you think are needed for the rest of the year after that?
Well, John, first of all, let me say, I talk about what I think should happen and what I think will happen. And I certainly was in the camp that they would only go 25. I didn't think this committee would come to it, but I've added some spice to what I usually say on this program and others with some of your other hosts and other hours, offering what I think should happen just because of this contention storyline for me. So I wasn't surprised by much of what Powell said. I thought he was actually kind of nervous about the labor market, a little more dovish than I thought. And I think where the market turned on him was the 50 discussion. Why wasn't 50 even discussed in any meaningful way? And I think the market expected that to be the case, and it just wasn't the case. And that's why you got the dollar ripping back up and the yields coming back up as well. The market is looking at this like maybe a small policy mistake, that we should be lower, we should be less restrictive. They're taking some undue risks on the employment side, and they have a lot going for them on the inflation side if that labor market forecast is weaker in the future. So I think the market reacted kind of right to that, and I think the Fed did sort of what you expected them to do, and I don't think there was much new here.
David,
as for
you talk about the market's reaction. Which reaction are you talking about? Because the market seemed to do a couple
to the discussion of 50.
Right, but both the stock markets, we just heard from several of our journalists here at CNBC, both stocks and bonds made some moves in a couple different directions after the announcement and then the commentary. And then, the S&P closed just off of flat.
Yeah, look, at the end of the day, these are pretty unchanged markets, as Rick was saying in the beginning, from where we started the day. But I think the market was excited about a dovish Fed. They thought Jay sounded dovish. The statement talked about labor market weakness. They focused on labor market weakness. The balance of risks had moved. Everybody got excited. You take the 10-year to 3.98. You take the dollar in, euro dollar up to 1.19 and change. And then you listen to Jay. And then you listen to Jay and he says, we didn't even talk about 50. And the market turns it around and takes it back to unchanged. That's basically the story of the afternoon. Completely understand why the market did it. Kind of completely understand why they did the 25. I'm a little not unhappy, but I find the idea that we're not even discussing 50 to be a little bit of a silly idea. And I think the market reacted accordingly to that. When Jay was asked as well, I think Nick Timmerose asked him about, would you consider the 50s and how do you think about 50s? He made some argument that those are only in really special times and really unusual times, like during COVID or like during major crises of sorts, which doesn't really bode well for what he did back in September just before the election. So I think it's a little bit suspect why the 50 wasn't even discussed, and I think the market reacted to that.
Well, when we see what the different voting members of the Fed are expecting for the rest of the year, and I guess maybe more than just that, where do you fall on how many cuts? Because maybe you're saying you just think that a bigger cut is necessary up front, but you're more in line with the rest of the Fed governors on where we end up?
I guess the way I think about it, John, is most of the committee wants to get there. They seem to want to get there in the next 12 weeks. Why not get there sooner? Risk manage a little bit more to this unbelievable change in the labor market outlook after these two sets of revisions that we had, both the revisions recently and then the 2024 revisions that were seismic, really. Okay. So the whole model is basically thrown out. The immigration story is now being replaced with a productivity story. I think you go take out a bigger insurance policy and say, look, we're going to wait and see. But this was a very significant change in the labor market outlook. And by the way, Jay sounded like he thought it was a very significant change in the labor market outlook. So I don't really think you had a storyline that didn't warrant at least an active discussion of 50. So I think that's why the market was modestly disappointed. I would be happy to see 75 lower, and then we just go meeting to meeting and watch it and see what the data says.